how to unfuck your future.
Yeah.
And everybody knows they're screwed right now. They can't get up the ladder. That, you know, like your kids, it's like how they're ever going to buy a house, right? So they're going to have to either be genius entrepreneurs and take huge amounts of risk with their entire thing, fine, but it may not suit them. Or they're going to have to make some investments that make up for that gap. There's no other way around it without being poorer than you were.
Yeah.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal, who accurately predicted the 2008 financial crisis, explores the key differences between the 2000 and 2008 crashes, the importance of decentralizing power, the role of AI, and the need for fostering genuine human connections through communities in a rapidly changing world.
Yeah, so the rest of the decade, the reason I don't believe we can have a crash is what we talked about.
Right.
You're going to nuke the entire pension system, the banking system, and the economy because there's too much debt. So we debase the currency, i.e. it will not be allowed. And I know people might not like that, but it is what it is. That's what, once you learn to accept something as it is, it's much easier to operate or invest around it, whatever. But then we've got the technological revolution that I call the exponential age. All of these technologies that are intertwined going exponential at the same time, right? This is going to be a renaissance. We're going to change what humans do for their existence. We're going to change the very structure of economies, even money. We don't even know what money is going to mean in a world of abundance. We're so used to scarcity. Lawyer gets paid a lot of money because he has scarce knowledge. There's only X number of lawyers qualified. You know, we know this scarcity thing because once you dealt with Bitcoin, you kind of understand the whole thing.
Yeah.
So they charge a premium because they're scarce. Gone. All gone. All knowledge premiums are gone because we're going to scale knowledge infinitely. It's like people don't understand certain things like you see written down, AI has an IQ of 100. Okay, well that's an average human being. It has an IQ of 100 on every single topic that all of humanity knows. It's a polymath. People don't think that.
Yeah.
And this is the dumbest the AI will ever be. I actually think AI is gaining consciousness or has consciousness, but that's a whole different topic for another day.
Yeah.
But so this decade, in fact, I don't even call it a decade. I think we've got 6 years. We've got 6 years before 2030, 2032, when the economic system starts becoming not understandable to us because we don't need humans. We find different purposes, different ways of doing stuff. I'm not negative on humanity, like we're all going to be displaced. But there's going to be such big shifts on what an economy is. When a robot's paying an AI, and there's no humans involved, what is that? That I think we've got 6 years before that happens. So I think we've got 2 cycles of the Everything Code to make as much money as possible to not have to worry about what happens. So if you go to 2032 and we're going to you start a great business, I see you, or my AI sees your business and says, hey, I can copy that and turn it into Hindi and sell it to India. It can do it in a minute. So how can we create products? How do we compete with each other when everything can be instantaneously replicated? Even with 3D printing as it comes in, it becomes even hardware manufacturing, everything. So I worry about what economic value is in stuff like that. So my view is we have 6 years, make as much money as possible.
Investors reacted warmly to confirmation by Fed Chair Jerome Powell that interest rates were now due to fall. The time has come for policy to adjust, he said during his speech at the annual Jackson Hole Symposium. The event, which markets had keenly watched for policy easing cues, saw a dovish Powell herald an appropriate dialing back of policy restraint, while not giving a concrete timeline for the cuts to begin. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions, he continued. Employment formed a key topic of debate over the week after a snap drawdown saw job openings for the 12 months through March 2024 revised lower by 818,000. The latest data from CME Group's FedWatch tool, meanwhile, saw markets betting on a 0.25% rate cut at the Fed's next meeting at the end of September. Responding, Bitcoin market commentators were in a bullish mood. Powell goes full dove, trader, analyst, and podcast host Scott Melker, known as the Wolf of All Streets, summarized in a post on X alongside Powell's quotes. Arthur Hayes, former CEO of crypto exchange BitNEX, predicted up only time for crypto. $BTC liquidations to the upside getting hit and a long wick forming, popular trader Craig Nouveau wrote while analyzing low timeframe market moves. The latest data from monitoring resource CoinGlass tracked liquidity shifts across exchange order books. It revealed a new block of Ask liquidity being added at $62,450, keeping Bitcoin's price from heading any higher at the time of writing. $62,000 nonetheless remained the key breakout level for bulls to flip to support on daily timeframes. Bitcoin is still facing a crucial breakout. If it breaks through $62,000, that would be a sign for the markets to continue rallying this week. Michael van de Poppe, founder and CEO of trading firm and Trading, confirmed in his latest X analysis. Van de Poppe added that the influx of capital to the U.S. spot Bitcoin exchange-traded funds, ETF, over the past week meant such a scenario was likely. We'll likely have that breakout, given the massive inflow we've seen in the ETF the past week, he wrote.
That's my kind of that's how I'm basing my entire life on. Yeah, I'm slightly older, so I'm further down the journey, but basically it's like 6 years, I have clarity. I've never said this sort of stuff before. It's not like, that I think the whole system is going to end. I'm just like, I don't know what it looks like.
Yeah.
And I don't want to be then trying to compete for assets or wealth in an environment where I don't know if I've even got an advantage. Because, I'm building an AI Raoul right now that it'll be out next month or something, and it'll be a one-on-one experience where you'll be talking to me. Okay, what does any of this mean to us in the end? We don't know. So
yeah.
I take it very seriously, the 6 years and these cycles. I'm not a believer in trading the cycle. I'm a believer in, when we have the big drawdowns, I look forward to them because you can add as much as possible and compound because you don't have much time. And if you mess it up and you're out of the cycle or whatever, this is the don't fuck this up thesis, you're going to miss this opportunity.
Yeah.
So yes, there is time pressure here. Get it right. And that leads us into the banana zone. The majority of this wealth happens in crypto or macro summer and fall. Fall is tricky because we don't know where the cycle peaks. But there's this point here around the US election and for about 12 months afterwards that things go bananas. And you see it every time on the Bitcoin's chart, it just does the same thing. So I know a lot of people dollar cost average. Great. This is not the time to dollar cost average. This is the last chance saloon before it gets crazy. That's when you need to have your money in the market fully. The other thing then is to not do stupid things when it starts going crazy. We've seen that in the past. People lose their minds, which has got to not lose your mind. Don't do stuff that gets greedy, use excess leverage. Don't do stuff with your wallet and compromise losing your Bitcoin. Don't do any of that stuff. Just sit, let it play out, and enjoy it, and don't try and time it too much.
Yeah, I love that.
Some traders might note that the S&P 500 is trading just 1% below its all-time high, and even gold, often considered the world's most reliable store of value, reached its highest ever mark on August 20. In contrast, Bitcoin remains 16% below its June 2024 historical high of $71,943. This discrepancy partly stems from differing risk perceptions. Stocks offer a cushion through dividends and strong balance sheets, while gold is viewed as a hedge. Meanwhile, Bitcoin continues to struggle to establish itself as an uncorrelated asset that serves multiple purposes. For example, global gold ETF hold $246.2 billion in assets under management, according to gold.org, while spot Bitcoin instruments, including ETF and ETNs, total $66.6 billion, according to CoinShares. Despite Bitcoin's intrinsic properties of censorship resistance and a fixed monetary policy, it still has a long way to go to solidify its presence in traditional financial markets. This disparity in risk perception explains why gold's rise to $2,531 was not mirrored in Bitcoin's performance. While investors are certainly concerned about the U.S. government's fiscal debt and are seeking protection in scarce assets, most are not yet ready to fully embrace an independent digital currency. However, recent inflows into spot Bitcoin ETF suggest a promising path forward. These instruments captured $226 million in net inflows during the 4 trading days ending August 21, indicating growing interest once initial barriers are overcome. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.